Good morning, traders, and welcome to BCI's morning market outlook. First up, let's talk about the US dollar. The DXY remained above 101 after renewed US airstrikes against Iran boosted safe haven demand and lifted oil prices, reinforcing inflation concerns and expectations for further Federal Reserve tightening. Markets are also awaiting Fed's June meeting minutes for additional policy guidance, while the probability of a September rate hike has edged higher to around 50%. From a technical perspective, the dollar remains firmly supported with the broader uptrend still intact. Resistance is seen around the 101.8 level, followed by the psychological 102 level. On the downside, the 25-day moving average at 100.62 is the key support level. A break below that could technically trigger a deeper correction towards the psychological level of 100. Next up, let's have a look at WTI crude oil, which has surged as much as 7% to around 75.7 per barrel as renewed conflict between the US and Iran reignited concerns over supply disruptions. The US revoked Iran's oil export waiver following attacks on the ships in the Strait of Hormuz, while Tehran responded with strikes on US military bases, raising fears of further escalation and tightening global energy supplies. Technically, crude has stabilized after holding above the key $70 level, with the market now looking for its next directional move. Resistance is located around 75.73, followed by the 25-day moving average at 76.65. On the downside, support is seen around 73.04 and then 71.6. Next up, let's have a look at gold. Gold has traded near $4,100 per ounce, but continued to struggle despite heightened geopolitical tensions. While conflict typically supports safe haven demand, higher oil prices have lifted inflation expectations and treasury yields, increasing the opportunity cost of holding gold and limiting its upside. Technically, gold remains below the Bollinger Band midline near 41.42, with resistance concentrated between 41.80 and the psychological level of $4,200. A failure to reclaim this zone could see the recent rebound viewed as a corrective move rather than a trend reversal. On the downside, key support is seen around 4,032, followed by the psychological level of $4,000. Lastly, let's have a look at the Australian dollar, which has eased to around 69.30 as renewed US-Iran tensions boosted demand for the US dollar and weighed on overall risk sentiment. Although the Reserve Bank of Australia maintains a cautious stance on inflation, markets continue to expect rates to remain unchanged in August, with expectations for another hike later this year. From a technical perspective, the medium-term outlook remains quite constructive, but short-term momentum has weakened. Initial resistance is seen at the psychological level of 70 cents, followed by the 100-day moving at 7069, and the 55-day moving average at 7088. Support is seen around the psychological level of 69 cents, with stronger support around the 200-day moving average.